Hello, traders. It's 8:03 a.m. Chicago time on Thursday, the 14th of February, 2019. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, things were going okay until PPI came out and was a miss. Saw a reaction in treasuries in the yield, and the equities have been selling off. The SOC for PPI in the S&P, wow, SOC for PPI on the S&P um, is 27.59 and a quarter, and we're trading around 27.39 and a quarter. About a 20-point drop on that news happened very uh, kind of slowly, but we are gapping down from yesterday's action. Yesterday's action was interesting, but the market is showing risk-off behavior. The bonds, the U.S. bonds, are up 31 ticks. Yowza. The 10-year note is 16 ticks up. The Eurobond's up 53 ticks. Volatility's up 1.35% on the futures. The DAX is the laggard this morning, down 0.62% or 70 points, followed by the Euro stocks and then the Russell, S&P, and Dow. So let me see what was missed here. Looks like PPI final demand negative 0.1 versus plus 0.1%. Oh yeah, advanced retail sales, appreciate that. Advanced retail sales came in at negative 1.2 versus 0.1. But it doesn't matter what it is. It's the market is taking it negatively and is pushing back below the 27.48 top that we had yesterday, the day before yesterday, which was the low of yesterday in the S&P. Looking ahead, what's in front of us? Where we have business inventories month on month for November at 10 Eastern, expecting zero point 0.3, prior zero point 0.6. Then we have natty gas at 10:30. We have Fed's Harker at 11 Eastern, and then that's it until we get the inflation rate year on year in China at 8:30 p.m. Eastern. And of course, currently there's chatter here and there on the U.S.-China trade talks, and then of course Brexit remains looming. So that's where we stand at the moment. So let's take a look at what we expected yesterday versus what we got. Yesterday, the primary expectation, we're opening in a gap around 27.52. The prior day's high is 27.48. We were opening in a gap. The expectation is we would take out the overnight high and then move back towards and into the prior day's range. The extended target or the key target below is 27.45 or so. The secondary scenario is we would uh, be responsive down into 27.48 and then bounce up, hold steady at 52, and then continue higher to take out the overnight high, hold steady at 27.55. Yesterday, let's look at the whole picture. Man, throat's really scratchy. Yesterday, we opened up in a very small open auction before we had a bit of a drive. The drive took out the overnight high and had a pullback continuation and then reversion back to the mid, and then it ended up pulling back, right back to the open. This setup right here looked strong to me, and that's the one I talked about at Convergent. One second. Which failed, and then we ended up going sideways for quite some time until this move took place, bringing us back to 48 on the dot, um, with the prior day's high, and then from there it just traded pretty much back to the open. We're trading the open from a distance a lot these days, not the open, back to the point of control. We're testing the point of control on balance days. We're like this. We're testing the point of control from a distance. It's kind of odd, but overall, if you look at yesterday's profile, another day where just the action is tough to read and it doesn't make much sense. There seems to be some disjointed um, type of auction going on because it seems like we do a lot of this and then pop and then consolidate and then it looks like it's a pullback, but actually it just comes right back to where it was. Then it drops, consolidates, then it looks like it's going to continue, pull back, and then it ends up going right back. It's just, it's almost like a fader's paradise on some of these days. We've had some trend days, but overall, it just hasn't been a very consistent read. I mean, yesterday we had balance up here all morning, and then we had balance down here, and then we had a little bit of something up here, and then we finished up down here. Um, it's hard to answer the question, what is it trying to do and how good of a job is it doing to get context? So I'm finding it a little more tricky to read. That was yesterday. We ended up with a normal variation day. We fell right out of the IB on the close on really good volume, really strong volume. From there, we reopened and were sideways all the way into the European Open. The Asian session just didn't do very much, very balanced. We built this profile down here. Then we shifted up, broke through to 2763 for the overnight high, just above 2762 yesterday's high, consolidated for quite some time before this 7:30 or 8:30 Eastern release, which has caused a clear trend down on volume. The overnight inventory was mostly long. Now it's probably balanced. I don't have the chart in front of me, and we are back trading towards the MC point of control, the big 27.3150 below, and we're moving somewhat back into balance. So that's how it looks to me. Let's take a look at it in the bigger picture. We have been walking up and walking up. Let's fix this. We've been walking up for a while, and yesterday put in what looks like an excess high on the candlestick over here, quite a long wick versus the body, with the wick on top and closing negative. So without today's drop on the releases at the bottom of the last hour, my view on this is that it is likely to be a weak day, and we are likely to trade through the range of Tuesday, the trend day up, and to start moving back towards 27.22. That was my expectation coming in, and what's happened since is it has made the move from 27.59, the upper end of the range, all the way to where we are now, and it looks fairly bearish to me, looks weak to me. So coming into today, we're looking at, let me see. Okay. We're looking at a market that is likely to have a small response, but in general, I think that it looks to me like it's likely to see resistance up top. So open auction out of range here, looking for a response towards 48. But overall, I'm looking for that to fail, consolidate through here, and then move towards 31.50, the point of control, and then potentially move towards the 22. If it gets through the 22, then it's likely to push into this 18.17 area down below. So it's we'll see what happens, but it's likely to fill this gap that we have had here for a week or so. That's scenario one. Scenario two is chop through chop through the open, chop 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 chop, test higher, test below, take out the overnight low, move towards the extreme since we are the overnight low is right at this low volume node, move towards the extreme of this day, 2722-ish, and then come back. It might break that low, but it's likely to come back into the range and hold steady in the range of Tuesday's trade. Okay. Scenario three, because of the imbalance that we have currently, scenario three is more of a drive. So I'm looking for an open test up, be it a short test or a protracted test into 48. And I'm looking for a drive down. A drive down is likely to push us really fast into the balance below at 2710 or so. And then for a consolidation, that gives us about 25 points of range or so. Scenario three is just a quicker scenario one. Scenario one is expected to kind of walk itself up and then walk itself down, giving us a little more opportunity. So that's what I'm looking at for today. That's what I'm looking at for today. It is likely to be a fairly active day. We are in the trend profile and have pushed into the low volume node. So if they can't hold on to this overnight low at 36.50, there are some singles down at 35.75. If they can't hold on to that, we're likely to see that 22 below. So that's what I'd be shooting for. That's the big trade of the day. I want to make sure everybody knows that tomorrow, Friday, I will be gone. I'm taking off for the weekend to break up this cold weather. So I'll be gone tomorrow. No trader bite. All business resumes as usual on Tuesday morning. Monday is a bank holiday. The futures will be closed at noon Central, 1 Eastern. Of course, I don't plan to be there for that day either. It's Valentine's Day. Hopefully you've got some plans. If not, then we're all in love with the market anyway, so we're not going to be lonely. Um, but I hope you enjoy it and take care. And I'll catch you on Tuesday. Have a wonderful weekend. Take care.